Friday, April 25th, 2025. Hope you're ready for the weekend, and thank you for making me a part of your day. Do me a favor, hit that like button, leave a comment in the comment section, and if you end up enjoying this content, subscribe to the channel. But let's go ahead and dive on into this. Cantor Fitzgerald, Tether, and SoftBank are forming a $3 billion investment vehicle, with Tether contributing $1.5 billion in Bitcoin. Bitfinex and SoftBank will add $600 million and $900 million respectively. Modeled after Saylor's playbook, the firm aims to absorb billions in Bitcoin. So here we go. Another potential MicroStrategy with Cantor Fitzgerald. Cantor Fitzgerald is not a small player in this, and obviously Tether and SoftBank aren't as well, but also Bitfinex there. So, everything adds up over time. This is a very bullish thing. What will that play? How will that play itself out in the charts? Short term, who knows? But long term, it's just another thing, and this is very bullish. Moving on, Bitcoin bull trap. This type of rally has happened 3 times in the past during 2024, 2022, and 2018 bear markets at almost precisely the same time, day 120, 4 months. The reasons are largely psychological. Investors become weary of the bear market at this point and fear future declines. They prematurely jump on any good news despite no change in fundamentals. There are some compelling reasons to think the bear market may be over. The VIX, for example. Investing is often characterized by conflicting, incomplete, and incorrect information among meaningful signal. The question is, which is it this time? And so we have right here, April 2025, the red line is where we are now. Is this a bear market rally and we're just going to continue to decline? Is it similar to November 2022, December 2018? Or do we have another leg up like what we saw in August 2024, where we did have a 20% drawdown in Bitcoin from its peak to its bottom? Bitcoin peaked a little under 74,000, went down below 49,000 in August of 2024. A comparison that this person draws out here is quite simply, the VIX. Remember the VIX in August, it spiked up to its highest level since the COVID crash because of the Japan carry trade fiasco. And the VIX spiked up significantly again recently with the trade war fears. And so perhaps this is a similar moment to where August of 2024 was an ideal time to buy. Maybe the week after Liberation Day was an ideal time to buy. However, it is not entirely out of the question that a rally up to $95,000 would be a bear market rally, and we would see further declines leading to a similar thing like the bear market of 2022 and 2018. Which would mean that, we'd have several more months and we would bottom out at the end of the year. So we'll see. Right now, I am of the mindset that we are going to hit a new all-time high with Bitcoin, and I lean in that direction, and then we'll see about what comes after that. So moving on, a reason to be more optimistic is I shared this chart from Axel Adler a couple days ago, but this is an updated chart where you see the orange. The orange was the 2022 bear market, and it extended. This deep orange after the FTX collapse did extend into 2023. And so that is, growth rate, market cap versus realized cap. That was a bear market. But then you compare it to right above my head here, this brief blip of time in 2020, where then after we flipped green again, after we flipped positive again, we had a significant rally in the price of Bitcoin. So here we go. We've flipped green again, we've flipped green again. And then you factor that in with M2, global M2, which I'm not a 100% believer in, but I do believe it has an effect. Perhaps it is time to remain bullish, especially considering that Bitcoin just started a new uptrend and the total altcoin market cap started a new uptrend. We will keep our eyes on MVRV, that's market cap versus realized cap. Moving on, Mr. Crypto, the biggest bull on X that I have found. It's just nonstop bullishness from this guy, and who knows, maybe he's right. But okay, here's his thoughts here. Rate cuts are coming this year. This is the most bullish event of 2025. Make sure you are ready for it. And you can see projections here according to the CME FedWatch tool throughout 2026, 2025, 2026. We're going to see perhaps rates go down to 300 to 325 basis points, a 1.5% rate cut over the next year or so. And what I want to tell you is I could not disagree with Mr. Crypto in this regard more. He's just flat out wrong. Rate cuts are not necessarily bullish. Rate cuts may be a sign that the Federal Reserve sees some fear moving forward, and they're cutting rates to protect the United States economy from facing something significant. And what I would tend to think would happen over the remainder of this year is that there would be something that would break towards the end of the year, and that the Fed would have an emergency meeting where they would cut rates significantly, and that we would be below 300 to 325. Does that mean we'd go to zero? I don't know. But after that would possibly also come some level of quantitative easing. At that point, I would be very bullish. But right now, not so much looking at these projections. That is not necessarily bullish. And I'm really quite exhausted of having to respond to people who talk about rate cuts being bullish, like, oh, what if the Federal Reserve cuts rates in May? Well, yeah, what if they do? They'll cut it 25 basis points or 50 basis points. They're not going to. It's a 90.9% chance that they're not going to cut rates in May. But even if they do, that's not significant enough. That's just not enough. So anyway, waiting for rates to bottom out. That's the name of the game. I've been preaching that since 2022. Did you notice anything about Trumpcoin today? Well, Donald Trump tweeted out, 2 days ago, Donald Trump tweeted out that the top 220 Trump holders will be able to register for a Trump dinner with the president. And so there has been lots and lots of buying of Trumpcoin, and it spiked from like $9 up to $14, maybe even higher than that within just a couple hours. And so why am I pointing this out? Is this something that I'm excited about? I'm obviously never going to be one of the top 220 Trump holders. If I had $1 million, if money wasn't a thing, that would certainly be quite an incentive to be able to have a Trump dinner with the president. And then I think the top 25 Trump holders are going to get a tour of the White House, something like that. That sounds really neat. But here's the reason why I'm pointing this out. It has nothing to do with that. It is before this Trump pump. I saw this post from someone I follow on X called Nebraskan Gooner. This guy, I really just like him. He's very unbiased with his trading mindset. And he posted this video a day before this big Trump pump saying, hey, there's a certain level that I'm looking at, $9.23. He actually didn't speak in the video. He used a banana to tap on the screen, whatever. But his target after a breakthrough 923, after a daily close above 923, was exactly the level that the Trump coin went to. And the reason why I'm saying this is quite simply the charts tell the news. Don't worry about the news. Look at the charts. The charts will tell you the news. The better you get at charting, the more that you'll be able to see, hey, something big is coming with this Trump coin, and you'll be able to take advantage. So I saw this video actually, and I entered, I bought some Trump coin and then sold it pretty much right after that pump. Maybe I sold it too soon, but profits are profits. So people like Nebraskan Gooner are fantastic people to learn more about trading in particular. All right, moving on out of crypto into metals. So Peter Brandt, I have a couple tweets from Peter Brandt here. Lots of funny things about markets and trading, like the last people to get in long in a major bull market are the most insistent that a correction is impossible. Is that true? And you can see this upward channel that gold has been in. It's been doing quite well over the last year. A year ago at this time, it bottomed out under $2,000, or it was, at the beginning of this channel, it was under $2,000. It was actually even lower than that in late 2023. And then it's gotten through this ascending channel here, but then broken out of the channel to the upside, which people may be excited about that. My response when I see something like that is what goes up must come down and re-enter the channel. And you can see this red dot is Peter Brandt's estimation of where gold is going to be by the end of the year. It's really just a revisiting of the channel and then riding that channel to the end of the year. And so what does that look like? I mean, that could look like a move down under $3,000 short term for gold, and then a gradual climb, maybe even an overcorrection where gold goes well under $3,000, but then a gradual climb to the point where we get to the end of the year and gold is about $3,500, which is where it peaked recently. If you didn't see, I made a video. I didn't post it on X, but I did post it on TikTok and I believe on YouTube about a very important family member of mine kind of FOMOing about gold, and that was a sign to me to sell. So I sold around $3,300, and I don't think I'm going to regret that. I'll buy back in. I didn't sell all my gold, but I sold around $3,300. I plan on buying back in and riding this to over the next 10 years, I think, to about $10,000 an ounce. But really fascinating stuff to see here. And then here's some more thoughts from Peter Brandt about gold. Here is my MT 7.6 for the week. I actually don't know what that means, but here's the way the markets work. Gold had a blow off and will now correct. The correction will not be over until almost everyone who went long above $3,100 gets blown out. These people right now are dug in, believing they are right, yet either the magnitude of the correct or more likely a prolonged grinding down will wear them out. They swear right now that there is no way they are wrong, but the correction will not end well until every late long is sold out. That is my expectation for what we have moving forward, is some kind of bringing us to a normal, back to normal from this level of euphoria that we saw with gold. But we'll see. We'll see. That's my perspective. That's why I am comfortable having sold my gold when I did. Profits are profits, and I do intend on buying back in. Now on to the S&P 500, another fascinating chart from Brett_ETH. Not a huge account on X, but I really love a lot of what he posts. So here's his focus here, SPX recovery time, how long it took back to get to the previous all-time high, the 15 times. So this is every time the SPX declined by 20% or greater. The recovery time varied from between 5 and 305 months. And so again, we peaked in February. If we're going to have a COVID crash type scenario, the COVID crash was the 5-month window. If we're going to have a COVID crash type scenario where we rebound within 5 months, that puts us in July when the S&P 500 would break an all-time high. Could it be that we have further down to go and we're going to recover in 305 months? That's 25 years. I tend to not think 25 years given the fact that we're pricing the stock market in the US dollar, and I'm assuming that was the Great Depression, that it took 25 years to get back. But hey, mean recovery time, 60 months. Median recovery time, maybe that's more realistic as to what we should be looking at with the S&P 500. That would put it at 21 months, almost the end of 2026. So fastest recovery times, 5 months. That's Fed introduced the largest QE in history, marking the bottom, 2020. But then after that, 1960 was 10 months, 1980, 11 months, 1987, the fastest. The fourth fastest was 20 months. And so I tend to think that we're not going to have this V-shaped instant recovery. It looks like historically that's just not how it's worked out, but we'll see. 1987, it was a flash in a pan, and if you bought really quickly after that crash in 1987, then you bought at a fantastic time and you rode it higher. So what's it going to look like to buy the dip? Again, I'm not looking to DCA right now. I'm not looking to buy the dip in terms I'm just going to keep on buying the dip. I'm going to wait for some kind of a reversal in the market, and then I'll be more interested in buying. So scenarios for the new all-time high. The fastest new all-time high by August 2025. The median new all-time high by December 2026. The mean new all-time high by March 2030. Or worst case scenario, which isn't included in this tweet, new all-time high by some point in 2050. Please no, I'll be 68 at that time. Please no, but we'll see. Most likely not. All right, moving on. The art of the cave. Listen, I just like reporting this stuff. I'm not saying that I agree with this. It seems like there is certainly a fumble that has happened with the current administration with this tariff stuff in terms of their expectations to what was going to happen versus what actually happened. But The Art of the Cane by Saifedean Ammous. Sorry if I mispronounced your name. Trump fought the bond market and the bond market won. Very key point, and I do agree with that. So sorry, there's maybe some construction going on in the background. I'm just going to keep going. So anyway, let me just keep reading here. Since getting into office, Trump and Bessent have relentlessly spoken about wanting to bring interest rates down and wanting to manage the U.S. debt sustainably. Countless Trump-aligned economists and influencers explained that the goal of their tariffs was to bring the bond yields down, even if it meant crashing the stock market. So Here's how it laid itself out, okay? We're going to bring the 10-year yield down, and maybe that means crashing the stock market. The reason why we're going to bring the 10-year yield down is we need to refinance trillions of dollars of debt at lower rates. And so what typically happens when the stock market crashes is that the 10-year yield also comes down. But this time around, we've seen the stock market suffer dramatically, and then the 10-year yield went up, which has caused a lot of panic from not just the White House, but from people all over the place. So the gambit seemed to work for the first day, and the huge crash in the stock market was presented as a small price to pay for fiscal sustainability. But then the bonds began to crash, and it became clear how disastrous the tariffs were and how wrong it was to expect that deliberately crashing the stock market would boost the bond market. It is cargo cult economics. People observe a reverse correlation between bonds and stocks, so assume that anything that crashes stocks must boost bonds. But there's no reason to suppose that the normal gyrations of market participants managing risks and allocations would hold when the government sabotages the financials of the country's businesses with reckless tariffs. Ultimately, bond yields are a function of the ability of the government to pay its debt. As its credit worthiness declines, yields rise. If taxpayers lose a lot of wealth, they pay less taxes, and the government's fiscal situation deteriorates. Tariffs made American businesses start revising profit estimates, consider downsizing and reversing business plans, and crashed their stocks. So, there's a lot more that I could talk about with this tweet. Follow this guy, or at least check him out. I'm going to hit the follow button here while I'm reading this. Author of the Bitcoin Standard. So I'm kind of embarrassed that I didn't pronounce his name right, if I did or not. But there was some expectation as to what the tariffs were going to bring, and then what we got was not it at all. And so now you're not seeing necessarily Donald Trump cave, but there has certainly been a shift in his mindset. And this is why he needed to bring bonds down, and he did not. And so where do we go from here? We'll see. But hopefully we're not screwed, aside from the fact that I've been saying that we were going to hit a recession in 2025 this entire time. And so maybe we kind of are screwed. Nothing to see here, folks. This is completely normal and healthy. Have they considered cutting avocado toast out of their budget? That's a typical boomer quote here. So medium age of the first-time U.S. home buyers. This is more of commentary into the environment that we're in right now. So the median age right now is 38. In the early 90s, it was 28. And now it's funny. I do have some friends who are in their 20s who own a house, and they just come off as like these very responsible people. Well, that was the median age in the early 90s, So it's getting more difficult out there, no shock. But who knows what comes next as far as maybe a housing crash. That will be helpful. We saw the median age drop by 2 years during the great financial crisis. Who knows? But anyway, that is all I have for today. I hope you have a wonderful day, a wonderful weekend, and I'll most certainly be seeing you in another video. Peace.